Hello, everybody. Good afternoon. Welcome to our latest installment of new things that we're learning with the CARE Act that passed last week, along with some other legislative items that have come up. Right now, today, we want to concentrate on what's known as the PPP loan, the Payroll Protection Package. And with me today, I have a guest, Chuck Copeland, who's president of First National Bank of Griffin, Georgia. Chuck also serves as the chairman of Georgia Bankers Association. So Chuck should be about as up to date on most of this stuff as any other person in the banking industry. So hopefully he can enlighten us a little bit. Chuck, like you, I've heard a lot of rumors and speculation and probably some misinformation. And I don't like to deal in that kind of stuff. I like to deal in facts and truth as much as possible. So what we want to talk about today is a little bit of the facts and truth that as we know it right now. And knowing that all this is going to be subject to change in the coming days. So can you give us a little bit of a high-level view of what the loan package program is going to look like based on what you know?
Sure, and the most basic fact and truth right now is the fact that the legislation was approved around 4 p.m. on Friday, which did approve the Paycheck Protection Program, which is a 7A program to be administered under the Small Business Administration, which is a 100% guaranteed loan available to businesses who have suffered financial stress due to the COVID-19 pandemic. Another fact is that within that legislation, the SBA was given 15 days in order to create the guidelines and the processes for how these applications would be handled and to, for lack of a better expression, stand up this program and it be ready to go into action. We are now Tuesday following Monday approval, so we're still inside that 15 days, and we're still awaiting those final guidelines and processes. The SBA has indicated that they are making every effort to exceed that 15-day target that they were given and do much better than that. We're even hopeful that perhaps that will happen this week. So that's the facts of what we know. Now, here are some interpretations of what is in that PPP loan program that we think are fairly reasonable interpretations of the guidelines that we've seen so far. And that is, first and foremost, that it is intended for businesses with less than 500 employees who have been impacted by the COVID-19 pandemic, and with an overarching objective being to keep people employed. And so the loan program is set up so that one can apply for these loans through their bank up to 250% of their average monthly payroll, and the intent is that it be used for operating expenses over the next 8 weeks is essentially the time frame for which they're trying to support these businesses with these loan proceeds. There is a component of this loan package that a portion may be forgiven through a grant process that will come on the back end of the program, if you will, meaning the loan is the first step, and then the grant for the debt forgiveness would be the second step. So those are kind of the high-level things that we know right now, or a few of those maybe things we think we know, but it's pretty clear in the guidelines that came out that those are kind of the high-level details of it.
So to put some parameters around it a little bit, is not only can I not go to my bank today or tomorrow, probably the next day or maybe the next day and get a check. Okay. And two, at this point, we're not even sure when that application can actually be handled by the bank.
That is correct. And so with that being said, you can imagine we've had a lot of inquiries since Friday of people, literally that's their question. When can I come? When can I come apply? When can I make my application? Or in some cases, when can I come get my check? Right. And until those guidelines are published and the portal, if you will, established for how these applications will be input, really we're in a wait and see mode. But that doesn't mean that businesses that feel like they're going to have a need for this loan program or would qualify for it necessarily need to just sit back and wait. What I would suggest that they do is begin the process, and there's really about three things that I would suggest that they do that will be very helpful to their banker and should speed up their process. First is locate your most recently available federal income tax return for the entity to which you intend to make this loan request. These loans are intended to be fast and get the money out as quickly as possible. So the purpose of that tax return is not to necessarily do the sort of traditional underwriting that you might expect with a business loan, but it's really to have a single source document that's accurate. And I mean accurate in terms of correct tax ID number, accurate in terms of the name of the borrowing entity, accurate in terms of knowing the structure of the borrowing entity, if it's a corporation, if it's an LLC, if it's a sole proprietorship, just basic information that is going to be very helpful to get it right on the front end versus having to scramble around on the back end and make sure that some basic element like that is correct. The next piece is as I mentioned, the hard stop loan amount is 250% of average monthly payroll, not to exceed $10 million. So a critical piece of the underwriting in determining the loan amount is going to be trying to quantify what that average monthly payroll is. Can be done a number of ways, but there are a couple of really simple ways to do it. One is if you have fairly detailed payroll information on a monthly basis, throw together a spreadsheet with a 12-month look back. The one that I've been working with recently with one of my customers, they went from February of 2020 back to February of 19. So I had a very recent 12-month rolling number or look back number to work from, and then simply taking that information and creating a 12-month average out of it. If that sort of information is not readily available, payroll service providers a lot of times can give you a copy of your payroll file, and it may just be the 12 months. It may be an annual total that have to divide by 12. It may be embedded in your 2019 income tax return, divide by 12. So that's second piece, federal income tax return, some method of quantifying average monthly payroll. And then the third piece is a projection of what 8 weeks of operating costs look like for the business, because the idea there is this is supposed to be temporary funding that carries you out over the next 8 weeks as we work through the effects of the pandemic. And those operating expenses, the more granular they can be, the better in the underwriting, separating out payroll and related payroll expenses such as employee benefits, rents, any mortgage interest paid on the facility, and utilities expense. Those are the ones that's nice they can be segregated out, and then any other anticipated operating expenses for that assumed 8-week period after you receive the loan. Why is that important? Because first off, you don't want to apply for more than you reasonably project you're going to need, and then because it is a loan and it will come with an interest rate. And then secondly, this is a $350 billion pool of money. You wouldn't want to limit someone else's ability that needs funding to get to the funding if you're sitting on money that you really didn't reasonably project that you were going to need. So those are the three things that people can be putting their hands on right now, and having that initial conversation with their banker and wanting to get that in their hands so that they can expedite the process.
I've heard from you and I've heard from other bankers in the last few days do they have a number of customers who want to be first in line because they're afraid the money's going to run out?
That is so true. Like I say, the initial conversations that I started having probably started on Thursday night after the Senate first passed the bill and passed it over to the House. And a lot of these were kind of layman conversations about what does all this mean and when do I apply and that sort of stuff. At that point, there was certainly a lot of unknowns. Once the president signed the bill on Friday evening or late Friday afternoon, those conversations really heated up. And by Monday, we were getting a lot of inquiries. So it is important that you be prepared and that you gather up that information that we just talked about. But realize it is a $350 billion pool of money that they set aside. There is a $10 million loan cap, and the intent here is for smaller businesses. And I may be totally off on this because I have no empirical data that support it, but I suspect the average loan is going to end up being less than $1 million. So it's going to take a while to absorb $350 billion in average loans of less than $1 million. But based upon the number of inquiries and phone calls that we're seeing, just as one single institution out there, there's going to be a mad dash to get in line.
But from a practical standpoint, is technologically speaking, and I've heard from a client that a banker has told her that they would be out of money in a day or two. Now, practically speaking, knowing the technology that you're working with along with the SBA, how accurate could that statement be? Because I don't see that happening that quickly. Right. It's physically possible.
I don't think they can get the throughput of applications to absorb $350 billion in a day or two. Now, will enough people have had conversations with their bankers and be somewhere along the process that theoretically in 1 to 2 days could the money all go? That's anybody's guess. To me, the bigger concern is the technology that the SBA will be using to receive these applications and be asking of the banks to input the application. Can it manage that sort of volume? And I think back to your question, I would be fairly confident in saying no. I can't imagine they've not been able to process nearly that level of volume in their legacy systems. So unless they've created some supercomputer in the last 72 hours, I'd be surprised if it happened that fast.
Now, you said something a few minutes ago I think is important to highlight too, and that is this is a two-phase program. You have the loan application and package, and then you have the forgiveness on the back end of that at some point in time. Now, can you talk a little bit about how you understand the forgiveness piece goes and how that might be substantiated?
Sure. So yes, and that's important to remember because I think, again, a lot of people started perceiving on Friday afternoon that all they were hearing was grant. They really weren't processing the fact that this starts as a loan. So the way we understand it will work, the borrower will submit the application for the loan based upon whatever is mutually agreed upon between the borrower and the banker in terms of what seems to be the appropriate loan amount within those guidelines that we're talking about. Then at some point post-loan closing, the borrower will have the opportunity to apply for a grant. The grant, which will, if approved, would then would be used to forgive a portion or all of the debt, depending upon the purposes for which the loan proceeds were used. The qualifying purposes for the debt forgiveness grant are payroll and related employee benefits, rent, utilities, or mortgage interest on facilities. Those will, for the 8 weeks post-loan proceeds, receipt of loan proceeds, We believe, based upon our past experiences with other traditional SBA loans, they will require documentation to support that you actually spent the money on those things. We don't know exactly what that documentation will look like, but there will certainly be documentation needed to substantiate the fact that the money was spent for those purposes. So this perception out there of free money and the potential for being able to perhaps spend the money in other ways and it still qualify for this forgiveness on the back end is not reality.
We had a conversation a little bit earlier that I think is fascinating, and I think our audience will stop and think of twice about it too. And that's the fact that on the loan piece of it, you are signing as a loan advocate certain certifications, and you're stating that these are the facts, and that I've been economically harmed, therefore I deserve these loan proceeds. But on the other hand, I, like you, I'm hearing people saying, "Where's my free money? I'm going to go get my free money, regardless of what my need is."
Correct. Yeah, I think that's a really important piece, and whether it'll be labeled an attestation or whether it'll be labeled a certification, again, we'll see the document when we see the document. But the intent here is to provide this emergency funding for businesses that have been impacted by the pandemic, and there will be a certification or statement signed by the borrower affirming that their business has incurred undue financial hardship or distress as a direct impact of the COVID-19 pandemic. So that's going to happen on the front end of the loan. And again, you're making that certification to a federal agency, the federal government in the form of the SBA. There will also be certain certifications and attestations as to the documentation provided to substantiate any request for the grant and the debt forgiveness on the back end. Again, it will be imperative that that certification be supported by correct and truthful documents. So this kind of, and some people are saying it half jokingly, I know, and then others I think are thinking, there may be an opportunity here.
This is my chance.
This is my chance. I would caution against looking at this as your chance for anything other than what the program is intended for.
So don't inflate your payroll to support that you maintain your payroll expenses. Don't go out and buy unnecessary assets with these loan proceeds and trying to cover it up with something else.
That's the best advice you can get.
And it's probably good advice anytime you're borrowing money from anybody or signing a document that you're sending to the federal government, no matter what it's for.
Exactly.
All right, how can, where do I go? If I'm ABC company that needs this loan, who should I go to talk to first?
So the one aspect to this program that is different than some of the earlier disaster relief pieces that were rolled out by the SBA over the last few months last few weeks relative to the pandemic. This program is being initiated through banks. All federally insured financial institutions are eligible to participate. So your first phone call needs to be to your banker, and they will be able to tell you immediately whether they intend to participate in the program or not. Their current status with the SBA will dictate kind of where they are in that process of participation, but they should all be eligible. In the event that you should call your banker and they were to say, well, we've elected not to participate in the program for whatever reason, they might elect to do that, which I think would be very rare. My advice would be to then ask of your banker, do they have a suggestion of another bank that may be a participating bank? Because they'll kind of know the other bankers in the marketplace. They'll know the other banks in the marketplace that may be the right fit for you as a customer. Outside of that, because of the fact is intended to be universal across all banks. The Yellow Pages may be your next best friend.
Or the Google machine, which is the current version of the Yellow Pages.
That's correct. That's correct.
It's good information you've given us, Chuck. Any other words of wisdom that you think our audience can benefit from?
The final thing I'll say is just remember, this is still very fluid. It is literally, now that we're past the legislative piece, it's literally an hour-by-hour thing as we just wait on the SBA to drop the documents that really start the process. So realize, as I said earlier, most people are speaking based upon interpretations at this point. There's probably a lot of good information out there. There may be some information out there that will be subject to change as the guidelines come out. And then finally, we have heard that, well, let me couch this a little different. Let me say, the whole intent here is for this to be a very simple process and to get money into the system quickly. And as a result of that, we believe the application and underwriting process will be very simple. We understand that there are people out there that are representing themselves as being consultants, loan packagers that can help you get this SBA loan, help you prepare your application, and so forth and so on. It really shouldn't require that because the amount of information being requested is not that significant. But if you've got an accountant, CPA, tax preparer that you've worked with, they're going to be able to get you most of that information. If you're using a payroll service, they're going to be able to get you most of the information that you need. You really shouldn't need that other expertise. What concerns me a little bit is I'm afraid that there may be some out there that are using this as an opportunity to either create a cottage industry or maybe an outright fraud or a scam on people because by gaining access to some non-public information that way. So
kind of like roofers after a hurricane, right?
That's right. So just again, my advice would be first call to your banker, and then based upon whatever guidance you get from your banker, then reach out to those trusted professionals that you already use in your day-to-day business. Be wary of those that are here to help you.
Exactly. Good information, Chuck. Thank you for joining us today.
My pleasure.